Alright, so in this video we're going to learn about fractals. Now this is going to be the model that I use the most, and there's a few reasons for that. One, let me just put this stuff on. So one, it's because it gets me the highest risk to reward ratios, and I've also got the highest win ratio with this trading model. So how does this actually work? Now, before we look at how it works, you also need to remember the time frames that I consider higher time frame and middle time frame. So for the higher time frame, daily, got the 4-hour time frame, and you also have the 1-hour time frame. For the middle time frame, I use the 30-minute and the 15-minute, and for the lower time frame, I use the 5, 3-minute, and 1-minute. And for the setups, when I want to enter, I would be using the 15-minute. So to enter, you would be using 15-minute, 5-minute, 3-minute as well, and 1-minute. Alright, so how does this actually work? So now, if you want to really get good at this stuff, you need to have your fundamentals down properly. So you need to know, all your external structure, internal, premium zones, discounted zones, swing structure, all that good stuff. Okay, so if you want to really get good at this trading model, then you have to combine everything that you know to trade this. Okay, so let's say for this example specifically, you were using the 50-minute time frame. Okay, so on the 50-minute time frame, after you've done your higher time frame analysis and you know what phase you're in a continuation trend or the pullback phase, whatever it is, right? And you see that you're in a bullish trend. So what you have to do is you wait for the 15-minute time frame to give you a retracement, and you just want to figure out when price is going to start going back in the same direction of the overall trend. So how would you do that? You would wait for price to give you a order flow shift on the lower time frame. This could be any of these time frames, so 3-minute, 1-minute, 5-minute. I mean, if you're using the 15-minute, of course it's going to be 3-minute or 1-minute, most likely, or 5-minute. So you would just wait for an order flow shift. You would enter. After the order flow shift happens, you'd wait for another retracement to happen on the lower time frame, and then you would target the 15-minute structure. Now we're going to look at an actual example of a trade that I took using this exact same idea. So this was this week on Monday. So this right here. So basically, every single time, since this is a fractal going from the 15-minute to 1-minute, what you have to do is you have to determine first on the 4-hour time frame what phase you're in. Are you in the pullback phase or are you in the trend continuation phase? So here specifically, you can clearly tell that we broke structure and we are clearly in the trend continuation phase. Okay, so we're trying to continue that leg up and we don't know when this is going to end. So all we do is we just continue this trend. Okay, so on the 15-minute time frame, how do we know it's going to finish? That's when we get an order flow shift back in the opposite direction. That's going to be our indication that price is now going to be pulling back. So here specifically, you can clearly see we got a very big push up higher. And what you do is you would look for the 15-minute break of structure. So here we got your 15-minute internal break. And then you'd want price to come into a discounted zone, respect your protected structure, because that's literally the whole idea. You're waiting for price to respect the protected structure, and then you get confirmation that is going to go and target this high, and then enter into the setup and target that high. Okay, so how do we know it's going to get respected? That's when we use our lower time frame and we go and check if we got confirmation that price is going to go in this direction now. So what we're looking for is an order flow shift. As soon as it comes into this zone, we get our internal structure shift right there. And then we also get our external. So this is making a higher probability. Sorry, this is the 1 minute change. Internal structure. This is external. This is making a higher probability, giving us the indication that price is now going to go and target this high up here. And all you have to do now is go on the 1 minute time frame, find out an area of interest that you're going to use to then target this high. Okay, so just using premium and discounted zones. This is our swing low and this is our swing high, and what we want is price to come into below the 0.5%, so below the 50% of the swing structure, and we want to find an area of interest to enter from. So in this case specifically, if we look at the left, you could have entered from this imbalance right here. You could have entered off this order block. Now the lower you go, the higher the probability. Okay, but you have to remember that price doesn't always come to the extreme areas, right? So you have to figure out what you want to use. So in this example, it reacted off of this, and this is exactly the POI that I used. So you'd put your buy limit right here, stop loss below the protected structure, and you would target the 15-minute week high. The reason why this is the weak structure now is because we got confirmation that this low was respected by getting this order flow shift on the 1 minute time frame, and then you would just target that high up there. It's that simple. Now that right there is your fractal 1 minute unmitigated area of interest. Okay, there we go. Now if I were to show you another example, but this time this is going to be in the retracement phase. So as I've mentioned before, when we get our order flow shift, that's going to be our indication that price is going to start retracing. Yeah, so if we take a look at this low right here, it gets broken, and the reason why you would not have been looking for a fractal again going up is because we got these equal highs up here. Because when you get equal highs, that's the indication that the low that tried to put in the high has now become the weak structure. So if anything, as soon as you got those equal highs and you got this big push down, you could have potentially entered targeting this low, but I don't do that. So when we get this change of character, this is going to be our indication that anything after this is just going to be the retracement of that move. So from here, anything after this, so all of this is just the retracement phase. So taking longs here without proper confirmation would not be the smartest thing to do. All you want to be looking for here is with proper confirmation, you'll be looking for sells. So how do we know from where do we take the sells from? So if we look at the 15-minute, we know this is going to be against the higher time frame. So until the 15-minute structure aligns back with the higher time frame, you'd be looking for sells. And if we look at the trend, we can see 15-minute breaker structure going down. Then you have another breaker structure going down. So you could have taken a fractal here, and then you had an additional. Now this is another setup that I actually took. This one right here specifically, I'll show you in a second. And then you also have another breaker structure right here. So let me just, sorry. All right. So if we go down to the 1 minute time frame, now we know that on the higher time frame, we are on the retracement phase, meaning that if I were to be taking longs here, the probability of them playing out are going to be very low, and I don't know when it's going to completely reverse. Okay, so if we go and take a look at this area specifically, we never got a nice order flow shift down, so I wouldn't be taking anything here. I'd be completely ignoring this, and on top of that, it was not in my time window, so I would not have been taking this trade. If we take a look at this area, however, we can see that we had our 15-minute breaker structure, and we also have our 15-minute protected high. So whenever it comes into this POI, we can see we've got our breaker structure, and then we also have our changer character. You got your POI, got your protected high. So you want to put your stop loss above that protected structure, and then you want to target the low. Now this is where, like I said before, your fundamentals come into play, and it just depends on how good you are with them. So we clearly know that we are in the retracement phase on the 4-hour time frame. So what you can do is get the swing structure and see if you have come into the 50% zone yet, and if you haven't, then you can use that as a reason for price to go down lower. So here specifically, you could have targeted potentially the 0.5% point, getting a 3-risk reward instead. But you know, anything anything above 2-risk reward is extremely impressive, right? So I don't try to get greedy. I just target the weak structure and just call it a day, because it's better to just secure profits and, you know, not get too greedy. Now if we look at what happened after, you got your 50-minute breaker structure, price comes into that area, and then you get your change your character on the 1-minute time frame, and then the exact same thing happens. The low gets taken out. So in this whole leg, you should not have been taking buys. It would not have made sense to take buys in this whole area. Okay, so what I would have been doing, coming into the day, I mean, the whole move happened in Asia session, so I wouldn't even have traded this. But you guys get the idea. So what you want to do is you would want to wait for price to come in to a discounted area, or it doesn't, yeah, sometimes it doesn't even come to discounted, but you want it to come into an area of interest, see that it respects the protected structure, and then target the weak structure. So if I were to go and give you another example of a trade that I took. Now this setup, let me just get rid of that. So if we take a look at the 4-hour time frame, we can clearly see they were on a bullish trend. Price comes into the extreme POI. We go to the, oh my god, we go to 50-minute time frame. Price comes into that POI, respects the protected structure, and then we get an order flow shift up. The way I entered was using the 50% of the imbalance. You put your stop loss at the protected structure and then target the high, giving you a 6.15 risk to reward ratio. This is a fractal. Now this is a fractal, but you're using the 4-hour to 15-minute. So this is going to be a bigger trade. So this could be considered a swing setup. But the idea is the exact same thing, but you're just using different time frames. Alright, so for this final example, I'm just gonna do a proper full trade breakdown of how I would do how I would actually take the trade specifically, okay, using the fractal trading model. So coming on from the higher time frame, we can see that we're in a bullish trend, and price is coming off an extreme area, meaning that we just respected the protected structure down here, and we already have a target currently in mind. Okay, so let me just, because the trade is over here, so I'm just gonna show you. So okay, so in this leg specifically, as soon as we end up getting the order flow shift back up on the 50-minute time frame of after respecting the protected structure, everything that happens after the order flow shift is going to be when you're going to be taking longs specifically only. Alright, you don't want to be taking trades against this trend. Taking random reversals is just going to lead to lower probability trades and much higher probability of you just taking a lot of pointless losses. So everything that happens here, you just want to be taking longs. So if I were to go down to the 1-minute time frame, if you were to just look for order flow shifts in the direction going up, majority of them would be playing out, and you'll see that you'll be getting high risk to reward ratios. Okay, so here specifically we've gone bearish, so what you want to do is you just want to figure out when price is going to go back to bullish. Right, so we've got our breaker structure. Let me do that. We've got our breaker structure right here. Now this is a trade I actually did take as well, and I also want to point out a few things when I show you this trade. So we got our breaker structure, price comes into our POI right here. As soon as it taps right here, we end up getting the order flow shift back to bullish. So breaker structure, and then you got your change of character. Now you can take it from this POI right here, you can take it from down here, up to you. As long as you enter the trade, it doesn't really matter where you take it from, and you just have to make sure that you cover the protected structure. So let's say you took it from there, stop loss about below this, and then you're going to be targeting the protected structure and ending the trade with a 3.85 risk to reward in profit, just like that. And as you can see, as soon as we take trades in the same direction of the overall trend, see how we get a big push to the upside as soon as we shift back up in the same direction of the trend. So if I were to drag this out, this could have been an 11 risk to reward trade. Say I waited for the extreme to get mitigated, I would have a tighter stop loss. And if I were to target the week 50-minute structure, I would get 6 risk to reward in profit. So, you know, any way you look at it, you're going to be getting a very high risk to reward trade. So this is how I use fractals. Now, you know, if I were to continue this trade, I would just be waiting for price to come back and just give me an order flow shift back up and then continue that bullish trend. It's very simple. So yeah, it's a very simple, but it does take a lot of experience and a good understanding of your fundamentals to get very good at this trading model. But once you get it down, honestly, I think if you just get really good with fractals alone, that's all you need to be a profitable trader. So I hope you guys understood how to trade fractals, and I'll see you in the next one.